Hey, this is Charles Freeman with Adapt First Investments, and I want to bring you the nerd moment of the week. As many of you know, I spend a lot of my time doing research and analyzing the stock market, and this week I ran a regression analysis on the financial conditions in Europe versus the PMI composite index, which basically is a gauge of economic sentiment and economic health in the region. So typically, what you find is pretty intuitive when the monetary conditions, financial conditions are more accommodative. It's easier to do business, and the economy is generally better. And so, if you plot that out, you kind of look at this graph real quick. It's a little easier than it looks here, but basically saying again, the more accommodative, the better the economy can be. And what I find in my research is basically when you get deviations away from an average or like this line here in the middle, then things tend to revert back to that mean relationship. So what we found with the red lines, or what I found with the red lines this week was is when the PMI got so high, the PMI index, and the economy was kind of going so well. As the ECB started pulling back and making the financial conditions more restrictive, the data fell back towards that line, and then also you actually saw a sell-off in the stock market in Europe as well. And now we're kind of in the opposite condition there, where the green circles sort of represent the European economy is in a sense underperforming. And as conditions are starting to ease, the ECB last week came out and they're a little bit worried about it. So they're sort of backing off some of the tightening and allowing those financial conditions to become more accommodative. So actually, I think going forward we might see a push back up towards that historical 3-year relationship in that line, and so we could maybe see a little more legs in this rally over in Europe. So anyway, just a quick insight as to some of the things I'll look at. Obviously, you don't want to make financial decisions based off of one chart or one data point, but that is just an example of one of the things I look at here at Adapt First, and hope this has been helpful. Thanks so much.